What do you think? Is the Bank of Canada finished raising rates?
They have to be finished raising rates, and they probably should think about cutting sooner rather than later. And let me tell you why. The Bank of Nova Scotia has most of its mortgages are variable rate mortgages, true variable rate mortgages, where people's mortgages adjust as interest rates go up. They said those consumers who have those mortgages, their spending is down 15%.
Right.
And Paul, we're just early days with a lot of mortgages that were taken out in 2020 and 2021 at very low interest rates, coming due and going to be renewed at much higher rates. This is going to be a bloodbath for the Canadian consumer. And I hope Tiff Macklin and his team recognize that and proactive, because where rates are now is going to lead to a recession. That's the bottom line.
A bloodbath in what sense? Mortgage defaults or sharply reduced consumer spending leading us into a recession?
Yeah, I wouldn't necessarily say mortgage defaults, but really a huge impact on the Canadian consumer, and there's knock-on effects. And we don't want that. And this is at a time when the U.S. is doing really, really well. So the bottom line for us is absolutely should be a hold, and hopefully cuts sooner rather than later. Inflation has fallen significantly. You've had many guests on your program before talk about the fact that inflation is remaining high because of mortgage interest costs and rent. Rent, not a lot you can fix with that. We need more supply, but mortgage interest costs you can fix as well. I think Bank of Canada, the Federal Reserve, they've done a great job. They've got inflation down to a reasonable level. Some things are beyond their control, like oil prices, like food costs. Not everything they can control, but what they can control, they've slowed it down, and congratulations to them. But they have to end it.
And we often hear that rate hikes are a blunt instrument, and they take a year to 18 months before they take effect. The Bank of Canada has raised 10 times since March of 2022, but not all of those hikes. I'm not sure that even half of them now are a full year old. And so I'm assuming you're of the view that some rate hikes haven't yet begin to exert their impact on the Canadian economy.
Correct, right? So we're in 2023 now. Imagine mortgages taken out in 2020, 2021, 2022 at very low rates. In Canada, most mortgages are 5-year, either fixed or variable, then they come due. What's going to happen, people are going to be paying a lot more on their mortgages with rates where they are today, unless they're lowered. That's going to impact consumer spending. Maybe this is what Bank Canada wanted, but be careful what you wish for.
Okay, that's